Thank you. Thanks, Carson. Good afternoon, everybody. How you guys doing? Good to hear. So I got about 35 minutes, which includes Q&A, so we're going to kind of go through this pretty fast, and I'll definitely be sticking around afterwards for any questions you guys have. So please, once we reset and go outside, I'll be around. So please feel free to answer any questions that did not get answered today, okay? So we'll get started on this and move forward. So today what we're going to talk about is obviously the world of renovation, namely ADUs, accessory dwelling units, granny flats, many names for them. But today we'll learn what is a renovation loan, the financing options that are available, the benefits of them, how these loans can be used, and basically assembling your team. Because we're basically, when you go through this process, it's not just the loan officer, the contractor, the consultant, it's a team. And so learning about that is very important to move forward to a end unit and finish that you guys will be happy and satisfied with. And the hiccups and the pain can be very minimal if you do this correctly. So, like Cole mentioned, the number one barrier is going to be within your jurisdiction, whether they allow it or not. Okay, so that's going to be the first thing. And City of Portland, since we're here, is basically pushing this like crazy. If you guys are here earlier today, they spoke about the holiday of the SDC fees being waived through mid-2016. So really taking advantage of that's going to be huge for you guys. And we'll see what happens after that point in time, whether they extend it or how that looks. But looking at that, yes? I'll get it. Yeah, sorry. So looking at that, holiday, it's, saves you, I think he said this morning, about $11,000 off your permit fees, basically. So, it's a good time to get into this and move forward with your project. Thank you. That better? So what is a renovation program? And I'm going to do some reading here. I don't like doing this, but for the sake of this, we only have so much time, so I want to get over this, through this pretty quickly. The primary use of a renovation program for the rehabilitation and repair of a single family or 2 to 4 unit properties. Above and beyond that, it goes to commercial, 5 units plus. Is an important tool to expand homeownership opportunities, especially in the City of Portland area. So keeping that in mind, this is where renovation, rehabilitation loans are awesome. It's a one loan to purchase or refinance and renovate a home, okay? So it's not just for homes that are, falling over, just really deferred maintenance. If you want to just update a kitchen, if you want to just, do an ADU, you can do that. The point is that these have misnomers as far as people thinking that they're just for homes that are really, really run down, but it's not the fact, okay? So here's options that I run across as I do this day in and day out. The first option being to finance an ADU, renovate your home, is savings, liquid assets. If you have $50,000 to $100,000, $200,000, $300,000, that's great. Maybe you guys probably aren't here because you don't have that money potentially, but it's an option, okay? Cash from friend or family is another option, obviously. Looking at credit cards, if you have 0% interest, 18%, whatever it may be, that's another option. HELOC, home equity line of credit, or a second mortgage. Now, the problem with this potentially is how much equity do you have in the house? That's the situation where you run into there's not enough equity or they won't go above 80% of the total value. And this is where renovation is really exciting. We'll explain that in a little bit here. Refinance your existing mortgage to get cash out. Okay, you can do that as well. Well, today we're here to talk about renovation loans and what they can do for you, how they can help you get to the end goal of your ADU, renovation of your complete house, whatever it may be. Talk about the benefits. So you can update a property, just update it. It doesn't have to be run down. You can just do a kitchen remodel, do an ADU by itself. Make optional improvements like a room addition or landscaping, no problem. Low down payment, which is nice. If you're looking to purchase and do an ADU all in one, it's a great product for it, or refinance, okay? But the point is that not much equity needs to be had put down and or had in your property you own already. And the rates are very competitive. Built-in equity, I'll talk more about this as I show you some slides, some pictures that we did. A Contractors paid as the work is completed, as the work progresses, as draws are obtained. Work, basically they're paid. So the money's in the bank for them, as long as they complete the work, which they often do. No need to worry about getting them paid. Again, if you're purchasing a property, and the property is not financeable potentially, or maybe you guys think there's repairs that need to be done, the seller doesn't have to do the repairs in order to move forward, which is another nice caveat to this program. A lot of times on purchase transactions, that's a holdup. Who's going to do the repairs to make this financeable? Who's going to do the repairs just because they want the repairs done? Well, it doesn't have to be done prior to closing. If there's ever a problem with appraisals, I've seen this before. They come to my desk. There's issues where the appraisal just won't pass. Basically, there's a lot of issues with the property. So what we do is basically turn it over to a renovation out of traditional financing. Buyers want to buy in a specific location, such as the Alberta area, wherever it may be, but there's just no properties that are financeable. Renovation is another key. Throwing an ADU with it, which is a great option for more revenue. And Michelle will talk about that here in a second. And just the revenue stream of it through renovation is excellent. Talk about some categories. So complete rebuild or tear down, which we've done. So you find a property, just tear it down to the foundation, expand the foundation from where it's at, the footprint, you can do that. Remodel. So number one, probably I would say 80% of what we do is remodeling. Add or subtract units. What do I mean by that? Taking a single family, turning it to duplex, triplex, fourplex, as long as the zoning permits, we can do that. Or taking it from a triplex to duplex, or from a triplex to a single family. That's happened as well. So it expands the opportunities there. ADUs, of course, and that's what we're here today for. Talking about, the 250 to 800 square foot home, ADU on your property you have now. So here's an example of a tear down renovation. We did basically with just property that just was deferred forever. Sorry about that. And so looking at as an option. This is what I mean by built-in equity. On this particular property, the purchase price is $204 here. This is in Southeast Portland. There's the top part burnt, and they expanded it. Renovations cost us $290. See, there's about $30,000 worth of equity that they obtained by going through this process. Because this isn't financed by traditional means. This is a purchase transaction. This single car garage ADU, this is actually Michelle's property, and she'll kind of talk about her experience here in a minute. But this is about a $45,000 project that she did. She gets $800 worth of rents, 240 square feet. So it's phenomenal. It's cash flows, and the break-even point is quick. So here's the front of her property. You can see the ADU in the back on the right-hand side there. Side view of what it used to be. And if you look at the back here, I'll show you another picture, what that looks like. So right there, I didn't think about this. When I came to tour this after it was done, studio, kitchen, bathroom. In the back here, she put the washer and dryer out there, which is a phenomenal idea. Because I just, instead of having the tenant go down to the laundromat, she put the washer and dryer in the back, which I thought was pretty great. Yeah, outside. So this is the back door here. So this is the kitchen. You walk through and you come out here. And so it's outside. You got it covered now, or did you get covered?
I don't have it.
Okay, fair enough. So this is actually a single, 240 square foot garage where she put, extra some beams in there just for aesthetics, and it looks great.
So we went with the vaulted ceiling, and I put single panels on the top to meet the insulation value of the R15 that you need with PES. There's also extra storage space that was over the bathroom and the kitchen. I was just trying to utilize every piece as much as possible. And then there's a pocket door that you see here on the right, and that goes into the, it's a 6x6 bathroom, super efficient, lots of storage. When you guys are putting in your ADUs, you want to put lots of storage where you think you would want it, because it's going to be either you living there or someone else living there.
So that's just an example of some of the projects we've done. And so it's just great to, thanks Michelle for saying that, it's just great to see the end result of it. So types of occupancy. So you could do owner occupied, that's going to be the basic, that's what a lot of people are probably here today, is they're owner occupied looking to put an ADU on the property. But also you could do non-owner occupied, so you have an investment property, rental, you want to put an ADU on it to collect more rents, that's no problem. Second homes as well. So, you don't probably find a lot of second homes in Portland, city proper, but it's an option if you do have a second home here. So renovation team, looking at just, how I foresee it, and, when we go into more of a purchase transaction and there's more pieces to the puzzle, but looking at the loan officer, on a purchase transaction, looking at a realtor, very important to have a realtor who's very versed in this, to understand zoning and what's available to you as a homeowner, potential homeowner, to make this happen. Contractor, very important that they know how to do these, know about the process, the draws. There's a few in town that are very, very good. I call it, just great quality without the big expensive budget. Consultant, we'll talk about this in a few slides, and a designer. The next speaker after me is great at this, and so I encourage you guys to stick around and listen to what he has to say, but he'll talk more about the design piece in a minute. So consultant, so basically on these projects, because it's going to be basically structural in nature, so you're going to need a consultant on these projects. And the job of the consultant is really to draw the roadmap. They're overseeing the project above and beyond to make sure that all the work is done in workman-like manner as far as the final project. And as we go through the draw process, they help with that as well. So looking at additional fees that go into that, this is the amount of the renovation. So anywhere from $8,000 on up to over 100, 200, 300, whatever it may be. This is their fee on the left-hand side. So it's not very expensive per se when you get a big project. But, the gentleman I was going to have come today speak a little bit. He couldn't make it, but there's only a few consultants in the area, but when you go through renovation financing, it's required that you hire a consultant as well. So the contractor, as far as, just understanding what their role is, obviously above and beyond building the workman-like structure, understanding that they understand that how draws are dispersed, their time frames, making sure that they get the draw process and the bids in right away so we can get this thing moving forward. On every project as well here, looking at the contingency fee, 10% is going to be your basic. So, and what that's for is for any unforeseen things. If they get into the siding and all of a sudden the siding is got a bunch of dry rot and whatnot, they want to make sure that there's enough money there for overflow. Now, if it's not used, it goes back towards down payment of or buy down of the mortgage, so the principal, and or you can use it for upgrades. So if you were going with, hypothetically, tile countertops and you want to upgrade to granite, or if you're going from carpet to hardwood, you can do that by using the contingency if there's nothing that's being used by unforeseen items. So some highlights and features of this. So the loan closes before the repairs begin, okay? Even on a purchase transaction. So it closes, all the funds are dispersed, the seller gets paid, the realtors get paid, and then the money is put in escrow and the work begins. So with Michelle's situation, same thing. She had plans, specs, everything's moving forward. Did you get permits after or before?
I got permits after.
Yeah. So she knew well enough, but she got the permits after it closed. We planned for those contingencies, the money's in there for permits, et cetera, but she got the permits afterwards. One closing with money dispersed, like I said. Also on this as well is looking at sometimes dollar for dollar items aren't accounted for as far as appraised value. I haven't seen that happen in a long time because just the rampant of as far as how the appreciation of properties are going up. But we go to up to 110% of the after improved value. So what that means is if you have a $100,000 purchase price as a hypothetical and $100,000 renovation is $200,000 and it appraises for say for 185 or 180, we can still finance that with your down payment, say a minimum of 3.5% or 5%, whatever you want to put down, owner occupied. We can still finance that and not have a problem because it didn't appraise out. That makes sense? The renovation to begin in 30 days. So I learned something today, which is kind of coincides with what we're speaking about here. The gentleman from the city of Portland, Jason, I believe his name was, they have a 6-month, kind of completion of this project that they want to see. Can you get extensions? Of course. which is kind of nice to hear when I was here this morning, because we have the same thing. We want this project done, started within 30 days and completed within 6 months. We understand we live in a rainforest basically, right? So it's one of those things where, you know, if you're putting a roof on or the outside building needs to be painted, we can get extensions for things like the weather. So just keep that in mind. Like he said, extensions are granted. We grant extensions as well. But you can build a house within 6 months. So that's the purpose of the 6-month window, that, you know, to move this forward, not to delay it.
And that rate is locked in then?
Yes. Exactly. So she asked if the rate was locked in. Yes, the rate's locked in. Once it closes, the work begins, the rate's locked in. Buyer can include optional renovations. So like I said before, it's not like it has to be done things. There's a needs and a wants list. If you guys, you know, have that. Health and safety are the ones that have to be done. That's going to definitely fall under the needs. And so on a purchase transaction, or even if you're moving out, you can finance up to 6 months worth of payments. So if you're going to move out, or say you haven't moved in, you bought the property, you want to do an ADU or do a major renovation, you can finance up to 6 months worth of renovations. So you can live somewhere, say maybe you're living in an apartment or rooming with somebody, and not have to pay rents and the mortgage at the same time. So it's financed up to 6 months while the project's being completed.
So are you saying that the payments begin after 6 months?
No, so they're financed. So basically, it's a good question. She asked,
It's been 6 months.
yeah. So she asked if the payments are delayed for 6 months. So we take the PITI for 6 months and we put it into the mortgage. So then you take the money out and pay the mortgage back while you live somewhere else, is the whole idea. Unless you can afford both payments, which a lot of people can't, but if you can, you could do that as well. So I just want to talk real quick about ineligible stuff that we, you know, don't allow per se, is tennis courts, gazebos, like just bathhouses, which we never really see, photo murals, television and satellite dishes, no swimming pools. We can repair swimming pools, stuff like that, but no new ones. There's nothing that really I haven't run into that we cannot do. We can even add appliances into it if you guys need that. You did that, did you not?
I bought a really, really skinny refrigerator.
Yeah. Nice. So yeah, appliances, washer, dryer, stuff you wouldn't think about as far as that you could actually finance into the mortgage. We could do that as well. So keep that in mind. So real quick about the process. It works just like a traditional mortgage, but the two things that are really here that could potentially hold things up on your guys' end is finding out who you want to work with and what you want to do. What's your vision? What's your end product look like? So figuring that out, getting it on paper, hiring a professional to draw it up, et cetera, and getting that done. So for instance, once we get the plans and specs, the bid, the work write-up, that's when we can order the appraisal. Because the nice thing about renovation, we do after improved value. So if your house right now is worth, again, $100,000 and you're trying to do a $50,000 project, well, we're gonna get the money if you owe, say, $80,000 on that, or even 50 sometimes. So we look at the project when it's completed to lend on that. So the appraiser goes out there with plans and specs in hand, if it's a purchase with a purchase contract, and or just the as-is of the current condition of the property, and they say this property is gonna be worth this when the project's done. Okay, so that's the nice thing about renovation. We look at one appraisal after improved value, and that's that. We don't do 2 appraisals, just 1. Okay, so going back real quick. Once this is, the contractor's bids in hand, work write-up, then we basically perform the appraisal. The appraisal comes back here, and then we just go right to closing. Money is dispersed into an escrow account, and the work begins within 30 days. Okay, so it's a pretty seamless process as long as everyone's on the same page, have the team formulated to move forward. So here's some common questions that I get. What time is it, Cole? Okay, perfect. All right, awesome. So here's some common questions that I get, and I'll just read them for you guys. So this person asked, once the pre-approval process is done, what are the steps that need to happen in order to get the loan approved? Do we need to have the plans with the city approval before the loan can be approved? So going back to Michelle's answer, you don't need the city, permits and stuff like that. We can just move forward with what the scope of work is going to be. Okay. So what is the appraisal process, and when does it happen in the course of applying for the loan? One is the first appraisal, one is the second appraisal. Again, there's only one appraisal required and needed, and that happens after we have your scope of work that you guys want to get done. A lot of questions I have sometimes is, can the scope of work change? We can upgrade, but we really can't downgrade because the appraisal is performed based on X, Y, and Z. So things have to kind of be finite in regards to what you want to do. Like I said, upgrading is not a problem as long as the budget's kind of in there with the contingency or things you guys want to improve on it. So this question was answered, and the answer is yes. Have I ever financed an ADU? If yes, would it be possible for us to email the person? So yes, I have many sources, homeowners such as Michelle. She's happy to answer questions as a reference. So it's a good thing to get these people who can speak about their experience and go from there. Have your appraisers ever done an ADU before? So this used to be a big issue, appraising ADUs. There's probably 10 to maybe 20 maximum appraisers in the area who really get this. I did one over in Hawthorne. It was the woman did a basement ADU, and it was a big project. And so we ended up doing where it was into a duplex and having different addresses and meters and stuff like that. But having the right appraiser appraise these properties is the key. I can't stress that enough. But not obviously, but we will definitely work with that. But I just want to kind of set your mind at ease that on the financing piece, this is a big piece as far as whether we move forward or not. Okay. So this one talks about they anticipate the ADU to cost approximately $50,000. Add $50,000 in value, but the project would be $70,000. Can we finance it still? It's really going to depend on if you own a property, so you're looking to do an ADU with, you already own the property. It's going to depend on your as-is value, what you owe, the after improved value. So it's kind of a yes and no answer. With these people, it was a yes because there was enough value there and the after improved value was great. They did a lot of good work to this property. If the total amount of the project exceeds the appraised subject to value, can we pay for the difference out of pocket? This happens very infrequently, but you can pay the difference out of pocket as far as if the appraised value isn't there. People want to move forward. If Michelle's, for instance, didn't appraise out, I mean, her ADU is paying for a lot of her mortgage, so it's pretty awesome. And then lastly, so some people want to pay the contingency or kind of for the contingency versus adding it to their mortgage. You can do that if it's 10%, 15, or 20% if you have the money in the bank versus adding it to your mortgage and having to buy down the mortgage later. So sorry for the screen there. So this is how much I believe in renovation. You know these guys, the Property Brothers? So yeah, we hang out. So yeah, seriously. That is not cropped in, that's an actual picture. So Q&A, I want to answer any questions. And before we actually begin that, I want you to talk about your experience real quick, if you don't mind, and go from there.
So I'm a project manager. I'm just today. I actually am a huge advocate for Prospect Mortgage, Paul Martinez. Kind of be vulnerable here. At 625 when I moved here, I had $3,000 in my pocket, and then I needed to buy a house for my family. Sorry, I get a little worked up, but it's possible. You have a potential property. I lost my house down in California, came up here to make a better place, and I had an idea. I have a little bit of a construction background. But I saw this detached ADU or this detached garage on a beautiful little cottage house for $200,000, and I come along looking through HUD loans. So the HUD renovation loan is 203K is what it is, and what you do is you go in, show them the property, and then you have to hustle. There's a lot of hustle on this part. You guys are all here because you're probably hustlers. And you're not looking to make a quick buck, you're looking to make a living and support, you can live here and someone else can live next door, and you do it every day. You all have neighbors. So this is just a great way to, one, I didn't have any money. I don't know how many of you all have money, but this is where you need to come in and talk with Paul, because the number one thing that I tell all my friends, because I probably have 4 different friends so far, is that, at least that own properties, I guess, is don't count yourself out because you don't have the money. You need to go talk with a professional. And that was something a very wise woman told me, my mother, a long time ago, is just go ask the professionals and let them tell you no, or let them work on your problem. And that's what I did. And this is where I am now. I have, I don't know, you can't see the picture, but I have a 2-bedroom, 1 bath. It was for $213, and then I did all the footwork, all the design. You can go through BDS. It's not scary. Those people are there to help you. And then I worked with Larry Hayes, who is the consultant, which is a HUD inspector. You pay him $200 every time he comes out, and he cuts the check for the contractor. The most important part is that you really need a contractor, and some people like designers that can really help you out and get you through the process. I had a very good contractor, and he was willing to let me do some of like the hard labor, digging the trenches and painting the house, and that way I wouldn't have to pay him. And so that kept the cost down. So I was able to build the ADU for $44,000. It rents out for $800 a month. It will be paid off itself. Technically, it's already paid off. I mean, if you want to write it on paper. So the house now appraised for $330. I got it for $213. It made $100,000 in 3 months. So now I don't have PMI on the HUD loan. I was able to drop 3% down. So that was $6,000. I ate a lot of ramen noodles for another couple of months. I was able to get that. The HUD loan allows you to be in at 625, the magic number. So if you guys, it's a battle between money and credit scores, and this is the sweet spot. So find the place and do your research, and it will pay off. It's just a cute little place. I think you guys, if you're gonna live in it, or if you're gonna have someone live in it, think about the long game. Put in nice pieces. Put in efficient pieces. The roof, you can see the ridge line right here. Those are SIPA panels. That's 6 inches of insulation with vaulted ceilings. So not only when you walk in does it feel really open and airy, but then I add a little space in the back to give them a little backyard. I put my Hawaiian style washer and dryer back there, which also adds, I mean, if you think about the rental market, people are looking for ease, and the washer and dryer, people will pay $100 more for that washer and dryer, and that thing will pay itself off. I have an induction stove, so the induction stove it's never hot unless you put another alloy metal on top of it and then turn it on, so they can also use that as a cutting counter. And this is a microwave that has a combination convection oven and microwave, and that's a Summit refrigerator. It's slimline European, switches the doors, super easy. And always make sure you pay for warranties, because if it's a rental, you don't want to have to deal with it for a little while. And just be super creative and take on that space. I think my partner and I will do this again. Definitely be using Paul, and we're super excited. So if you have any questions about anything, please stop me in the street. And also I'm here.
Stop me now.
Okay, stop me now.
I mean, I see the street. The HVAC, what'd you do for heating and air?
So there's windows, and then as you can see, here's windows here.
Okay,
That's my AC, and then actually on the next wall over, that I don't show you that picture because it's a blank wall with just a slim line. I forget, I was asked by the Energy Trust what it was. It's a very slim line energy, well, it's a convection one.
Is it a cadet?
No, it is absolutely not a cadet. Do not get one of those. Those are super inefficient. But actually, I will make sure I give the information to everybody. But
Is it electric?
it is electric. It works off of 110. The other great thing about this property, I was able to, because it was all in line, I was actually able to upgrade the water and fix the sewer. And I had a 100 amp panel in the main building, and now the 100 amp is now in this building and upgraded to a 200 amp. I highly suggest that you go to a what are they called? The power boxes, meters. Go to 2 meters. That way, you know, people are better if they're being watched as tenants. So just pay the extra. It was $25 of a change order to the electrician. It's super cheap, and then it's a $10 a month fee for an extra meter until you get a renter, and it's all worth it because the renter pays all the electricity bills, which are nil when you have insulation and SIP panels and all the energy efficient items.
They pay their own water, they go that water and gas.
So they pay water through me, but I give them all energy efficient water, showers, and there's a small low boy water heater outside. Do not use livable space for things like water heaters and like washing machines. A lot of them go under the counter now. Just if you think you have an idea, it's probably out there. Check the internet.
Questions? Yes. You.
I'm a real estate agent, and I was wondering, so my clients, is their total purchasing power tax, how is that?
Yeah, so basically you're going to take the purchase price plus the renovation. That's going to be acquisition. You do have to qualify for the total amount, unless you're down
Total
payment.
acquisition?
Right.
Okay, great, thank you. I think that was kind of my same question.
Yes.
And
So
the rental
that's what's
price-
super helpful. It's one payment. So the payment for the house, the mortgage, the renovation is one check sent out every month. And then I get my little bonus check of the renting check back.
Does the proposed rent count towards the payment qualification?
It doesn't yet, but yes, good question, yes.
This consultant that you need to hire, is that just from the loan point of view, not from BBS?
Correct, from the loan point of view,
Okay.
correct.
But you will be inspected.
So she had asked, the consultant we talked about, is that from BDS or from us? It's from us, the lending, but BDS will come out and do the final inspection, make sure everything's good to go, yes.
So these are HUD renovation loans then?
No, that's a good question. Hers was, she disclosed that. I prefer, if somebody has the better credit score, to go conventional renovation,
Okay.
non-HUD. And I didn't get too much into that because my time was kind of limited, but it's good.
And in terms of interest rates then, what are we looking at?
Probably looking about, I would say about a quarter higher than market, 0.25. Yes, in the back.
And it's a long-term loan then?
Yes,
Be paid after?
it could be a 30-year fix, it could be a 5-year arm, but 30-year fix is what I always recommend to my clients. So long-term loan, yes.
Does that have more than one contractor bid?
She asked, you have to have more than one contractor bid. You do not. Some institutions out there you do, but you do not have to have more than one contractor bid. Yes.
Can you do a renovation loan without renewing your existing mortgage?
You cannot. It's basically re-encumbering the first mortgage.
Is there another option if you don't have a
Home equity line of credit, if you have enough equity, cash. So no, there's not if you're looking traditionally. Yes.
So to clarify, can you purchase a new property and do like 1 or 2 ADUs all in one? sort of
Correct.
package?
Yes. 180, but yes.
180.
She asked for 2.
So no basement and then an ADU?
Yeah. Yeah. Yes.
I'm sorry, just also for clarification, so you have an existing home, an existing mortgage, you're building an ADU, you can get one loan to refinance your entire mortgage?
Correct.
And fold in all the costs for renovating and building this ADU?
Yeah. So she asked, if you have an existing home, existing mortgage, can you roll that all into one? And that's what you basically are doing. Yes. And the nice thing about that is we look at the after improved value. So if your house right now is only worth $200,000, but you want $50,000 and you owe 180, well, guess what? You're going to be stuck. So if you do a renovation, it's after improved value. Now it's worth 350. So we lend off that amount.
Is this for owner occupied or can it be for maybe you have a rental property you want to?
It's for owner. She asked, it's for owner occupied only. It's for owner occupied, second homes, and investment properties. So rental properties as well.
Rental property
Yes.
as well?
Yes.
What general area is this in? Your house?
Oh, I'm in right across the street from Roosevelt in North Portland.
Did you say you can finance appliances in this?
Yes. You can. She asked if you can finance appliances into it. You can finance appliances, washer and dryers. Yes, you can. Yes.
To clarify, if someone's happy with their existing mortgage, you do or do not have a product to just finance the ADU?
There's no product. We're re-encumbering the first mortgage unless you get a home equity line of credit. But a lot of those only go up to 80% of your value of your home, as is, and not after improved value. I understand. I mean, last year, the year before, they're 3 1/4, 3 1/2, and I get that. Yeah, because if you get rents at $800 a head or 800, for ADU or plus $1,000, it's going to pay for itself. That rate will be kind of a thought in the past. Yes.
Just an aside, I recommend that you don't finance appliances over 30 years.
If you can afford it, yeah, absolutely. A couple more questions. Yes.
Yeah, so if one doesn't have a mortgage, they just own their home outright, then
So
it's a little repetitive, but I didn't quite get it.
So she had asked if someone owns their house free and clear. But yeah, you could, so I gave you a couple options there: home equity line of credit, refinancing. So we could talk afterwards and talk about just different ways to do that. I get a lot of that, and so there's different options for sure. And renovation may not be the best option. So yeah, yes, I think you had a question over here. Yes.
What's the down payment on a conventional renovation?
5% equity or 5% down payment. So if you're refinancing, it's 5% equity after approved value. If you're purchasing, it's 5% down of the total acquisition, which is going to be your sales price plus your renovation cost. Yes, over here.
So can you also use this type of loan to add structure? So if there's not a garage or a basement to convert, can I build an additional?
Yes, we can, as long as the city allows it. Yeah.
What distinguishes like a duplex or triplex from an ADU kind of thing? I'm still trying to figure out how could you have like a basement apartment you could rent that wasn't an ADU? Is that possible? Or technically?
Yeah, so zoning, so she asked one more time, could you?
Like if you had a house and you wanted to rent out a basement apartment, but you also wanted to build an ADU in the backyard, how is it possible to have the basement apartment not be an ADU?
Okay, so basically she's got a single family, she's got a basement, she wants to do an ADU as well, but she wants to rent them both out. And that comes down to, I guess, I've seen people do that where it's a non-legal ADU, so there goes the basement, you want to just have a separate entrance and just on your own do that, that's completely up to you having roommates, and then you build the ADU legally.
So the ADU cost $44,000, but I had $5,000 in the main house as renovations. You could probably use that $5,000, like whatever your number is, for the basement. So that makes
And then
sense.
I'm just asking.
But it won't be a legal rental though. It'll just be a room you're renting
You
per
want
se.
to permit the space, but that's
Yes,
all.
right. Yeah, anything's possible, I promise you that. Yes. You had a question? Any more questions? I think we're running out of time here.
You can do these for rental houses?
Yes, rental properties, single family, owner occupied. You can go from single to fourplex. You can go fourplex down to single family. Investment properties, second homes, owner occupied. Absolutely. One more question. We're going to.
15 years as well.
Yes, we can do 15 years as well. Yep. 5-year, 15, 30-year fix. Absolutely. Thank you very much for your time. I'll be around for a while.
Really quick question. My rental property